So I had a great question come in last week. What is a QLAC? What is a QLAC? Well, often not talked about because it's so rarely used. So let's jump right in and do the Sesame Street on it. Q is for qualified, meaning you can only use qualified money. It's IRA money, formerly 401k money, formerly 403b money. When you save money pre-tax, you're going to get forced into required minimum distributions. And so part of the reason for these qualified longevity annuity contracts is to be able to defer those required minimum distributions. So they limit how much you can put in there. It's the lesser of 25% of all your IRA money, or 145,000. So no more than 145,000 and no more than 25%, whichever is less. Qualified money only. The next part is longevity. Okay, the whole idea of this, on top of deferring those required minimum distributions, is to help fund life later. So if you happen to live past 85, this is going to provide an extra income starting at 85. Then there's the deferral annuity side of this, okay? So this is really just a deferred fixed annuity that requires annuitization by 85 years old. This is an annuity. So it sits there stagnant for 15 years for most people that do these, but you can defer them for 20 years. Okay, you can, depends on the age when you start them, and you can defer them as long as 85 years old. At 85, they're required to begin, and they now pay you a payment for the rest of your life. So if you live to 100, that's 15 years worth of payments. And the way the math works, that actually turns out to be a great deal. If you live to 86, most of these have an option to refund your heirs whatever you didn't receive, so you don't really lose out on any money there. And then C is for contract. All right, so contract means all the terms are going to be laid out up front. So we do have to understand that these annuity contracts, yes, can be complex, but if we know how to read through these and pull out the important stuff, we're going to get right to the meat of it pretty quickly in these annuity contracts. And that actually turns into an advantage, because you should know what to expect when you're getting one of these. They will be able to tell you exactly how much income it will pay you in the upcoming years. Okay? So, are they good? Are they bad? When do you use them? Well, this is the hard part. So let's talk about some of these pros and cons. The idea is you take some of your IRA money, you stick it into this contract. It now sits in deferral status until the latest date of 85 years old, and then it starts paying you a payment for the rest of your life. Okay? That's the concept of this. So some of the good things, well, deferral of required minimum distributions up to 85 years old. Okay, so I put some payments on the screen here, and the idea really is if you're a 70-year-old male and a 70-year-old female, obviously either or, maybe you look at the mountain of IRA money you have, and you just don't really want required minimum distributions as big as they're going to be. Okay, so you decide to take the maximum, you send it in. Actually, in this case, I ran the numbers at 100,000. You take 100,000 of your IRA, and they're guaranteeing a male at 85, from 70 to 85, 43,000 a year payment. So all you got to do is live a couple of years to get back your $100,000, and then everything else is gravy on the top. Okay, so if you're healthy and you don't need all that required minimum distribution money, this might be a valid option for you. Now, deferral is nice. Additional income could be nice too. And one of the things that I always think of when I think of these qualified longevity contracts here is, well, hey, when's the most likely point in your life that you're going to need some form of assisted living or long-term care? Well, the vast majority of us, if we end up needing it at all, it's usually 85 or beyond. And so wouldn't it be nice to have a nice kicker of income, another extra 40 grand a year coming in to help pay that long-term care bill? So that's another way to look at this is this additional income that starts coming into you, guaranteed payments for the rest of your life. Whether you live to 100 or 88 or 94, it doesn't matter. As long as you're alive, they keep paying that payment to you. And $43,000 a year off of a $100,000 investment's a pretty darn good payment to you. Okay. Then there's the ability to add a joint annuitant. Well, on your IRA, you can't add a joint anything, but because this is a specialty contract called a qualified longevity annuity contract, QLAC, the IRS allows you to put a spouse on there, allows you to make this joint income. Now, the payments are going to be based on the lower of the two typically. So yes, women live longer, which means the payment will be less, but at least it's as long as one of you is alive, which is a great concept in this case. Refund upon death is an option, meaning you're not losing the money you're putting in there. If you put 100,000 in there, if it's in deferral, your heirs are going to get that plus some growth. If you start taking payments and die 2 days later, the heirs are going to get the rest of the money that was in there. Period. Certain options, meaning I want payments for at least 10 years. So if you pass away in year 2, then your heirs are going to keep getting those payments for 8 more years. And then there's the inflation adjustment options. Okay, so they can give you a nice little raise every year. You're going to start out at a lower number, and then you're going to get a little bit of a raise each year, which if we're already waiting till 85 to take the income, I would caution people on that one. It typically won't make sense. And a pro is men get paid more. Don't worry, ladies. On the con side, I will tell you, the ladies get paid less. That's a bad side of these things. Okay, so let's talk about some of those, the bad side of these things. Well, we're only allowed to put 145,000 in there. Okay, so that's the maximum we can put in there, or 25%. Okay, so for a lot of people, if we have a mountain of IRA, I keep seeing people with $1 million in their IRA on up, and it's just, you know, all your life savings is in that IRA, and 100 grand doesn't really move the needle. So it might help out a little bit here and there, but that limitation is a con for sure. That's a bad side of this. Low payments, you know, look, 43,000. You know, after 15 years of deferral, it actually doesn't sound bad, but you're 85. Statistically, how much longer are you really going to live? Statistically, you're only going to live maybe a year. So when we look at this, if you happen to do this right, great. You end up living a long time. You live to 100. It was totally worthwhile. If you pass away at 86, like you're statistically supposed to, really, did it really improve our situation? Probably not a huge amount, okay? Low growth in deferral is the other side of this. The vast majority of these contracts that I've looked at have very low growth compared to what else we could invest it in. So that's one of the huge reasons people don't end up doing this. You end up putting $100 to $145,000 in deferral, and it just kind of sits there stagnant. You might get a little bit of CD type growth in there, but the reality is we're not doing this for the growth. Okay, it's really because one, you want a little backup plan in case you live for a long time past 85, and two, you want to not have that extra chunk of money for required minimum distributions. If we're really looking to grow this money for our heirs, this probably is not the right place for you. Okay, and then there's the cost of the options. So you'll see very quickly that the refund on death, your payment's going to be lower. The period certain addition is payment's going to be lower. The inflation adjustment, the payment's going to be lower. And we have to remember, you know, certainly refund upon death makes sense. We don't want to just throw this money away. Statistically, we're not going to live a huge much longer than that 85 mark. So we need to think about these things and throw, you know, a lot of us prefer not to throw our money away. And even worse, we would rather not just hand it to an insurance company and never see it again. So yes, refund upon death, I would say, is a necessity in most people's cases, or the period certain. But if you play with the numbers, some carriers are going to give you more of a hit to do period certain instead of refund upon death. So you have to carefully consider these options and know those are the three primary options that you'll have at every single carrier. Okay. Women get paid less is the other side of this. We do have to understand that women live longer. So yes, that means you get paid less in these things. But still, you look at a $100,000 investment with 15-year deferral with a $36,000 paycheck a year. That's still not too bad. That's, you're looking at $3,000 a month off of a $100,000 investment. You don't have to worry about the required distributions in the meantime. And now we have a boost to our income at 85. So some fun little planning techniques you could do with stuff like this. It doesn't really work for everybody, but certainly this is a neat little opportunity for some people. Okay. Hopefully that helps demystify this. There's a little window where this could be a fun little planning tool. I kind of like the idea of using it as a long-term care policy for you. If you go into retirement with a mountain of IRA money and you're trying to figure out what all to do with it, and you don't need that huge required minimum distribution, then yeah, maybe putting that $145,000 into one of these and looking at it in your head as that long-term care insurance policy for yourself instead of buying the terrible stuff that's out there right now. Some people don't qualify for life insurance because that's where a lot of long-term care insurance has gone. And so this might actually be a neat little option for you and something to think about. If we can help in any way, certainly you could contact us on our 800 number or contact us at sesweb.net is our email address. Hope you enjoyed this. Hope this helped out a little bit. Like it, subscribe, and keep coming back for more. We're always adding content every week. Thanks again, everybody.